Hi, Jasmine here from Redwood Financial, and this week's frequently asked question is what happens to my pensions when I die? So a really good question, and obviously a really important one, as a lot of us have been building up wealth in our pensions for all of our working lives, and the values of these pensions can be really quite important. Now, when you pass away, the position on your pensions is going to largely depend on the type of pension that you have. So very simplistically, if we break it down into two forms of pension, one is going to be what is called a defined contribution pension. Essentially, this means your pension is invested in funds. The valuation can fluctuate up and down. It probably started off as a personal or workplace pension, and you are now in something like flexible drawdown, where you can take income, take lump sums, but the pot of money still remains invested. In a personal pension or a drawdown pension like that situation, 100% of that pension fund, whatever the value is at the time of your death, can be inherited by your beneficiaries. So whoever you've nominated on your expression of wish or nomination form for the pension fund itself, or failing that, your main beneficiaries within your will often be referred to by the pension trustees and will then be paid out to your beneficiaries. If you die before 75, the pension will get paid out 100% tax-free to those beneficiaries. And if you die after 75, the pension will be taxed subject to the income tax rate of those beneficiaries. And you can split that pension fund with as many beneficiaries as you like. So you might split it between your spouse and your children, or just your spouse, or just your children. So you've got a lot of flexibility, and 100% of those benefits are going to go to your loved ones from whatever you don't spend or enjoy from that pension pot in your lifetime. The second alternative that you might have to a flexible drawdown pension is either a final salary scheme pension or an annuity pension, where you've used a pot of money to purchase an annuity when you originally retired. And the final salary scheme pension and the annuity pension work very similarly in the sense of you have a fixed guaranteed income for the rest of your life. It's no longer invested, it doesn't fluctuate up and down in the markets, and you can't vary your income. Everything is fixed and guaranteed till the day that you die. Now, the terms of annuities and final salary schemes are going to change from scheme to scheme potentially, but the most common setup of a final salary or an annuity pension will be a 50% widow's pension. That means that in the event of your death, let's say you had a £10,000 a year final salary or annuity pension, and a 50% widow's pension means that once you've died, only £5,000 a year is going to be paid to your spouse for the rest of their lives. Typically, what then happens is once that spouse has died, the pension completely dies and ends at that point, and there's no ongoing payments to any other additional beneficiaries. Sometimes you can have a dependent's pension as opposed to a widow's pension if you don't have a spouse and you want to have an income paid to the children, but again, a lot of that is at the discretion of the trustees of the pension scheme and will be under the individual terms of the pension. Sometimes you might have a slightly more generous widow's pension, maybe a 60 or 80% widow's pension, and sometimes annuities might be set up with no widow's pension whatsoever. But these things you should have been made aware of and were given options on before you made the decision to purchase the annuity. If you're not sure or you don't remember, it's worth getting it checked out so you know the position for your spouse if anything happens to you first. And unfortunately, if you've already purchased an annuity and you don't like those death terms, they can't be changed. It's too late once the annuity is in place. So I hope that helps answer that question. If you've got any other questions about the difference between annuities and flexible drawdown and what's the best outcome for you and the right thing to do for you and your personal circumstances, then please check out the website. We've got lots more information on that, and also get in touch as well, because we can advise you on, based on your circumstances, whether or not you should be looking down the flexible drawdown route or favouring something like an annuity or final salary scheme pension route, if that's the best thing for you and your circumstances. I hope that helps answer the question though of what happens to your pensions when you die, and I look forward to answering more questions next week.